Hello everyone, and yes, slowly but surely, gradually, carefully, we're all moving back indoors. Well, some of us, apart from all those people who fled the city when they got the chance to Byron Bay and Moss Vale and wherever else they went. In terms of economic data today, it was pretty serious actually. In China I actually saw a headline where it said Chinese industrial production accelerates. Well, it's at 3.5%, and industrial production in China used to be at 7.5, 8.5% normal. So it's not really a great acceleration at all, 3.1 to 3.5, and manufacturing is showing signs of contraction. So this is still a very worrisome situation and leaves room for a bit of a fall off the cliff. So I wouldn't get too excited about those acceleration headlines. The other data we saw in China today, retail sales, well, they're up 4.9%, and that sounds like a great number in the West, but remember retail sales in China are always up 10, 11, 12, 12.5%, sometimes 13%. So for Chinese retail sales to be running at 4.9%, it really just goes to show what I've been warning all along, and that is that China will continue to have strong economic growth in absolute terms, but China is permanently slowing to rates of activity that are more similar to those of the West and other mature capitalist systems. And we have to remember the economic system within China has been pretty close to laissez-faire capitalist, and it did have that youth aspect of high profit margins, low regulation, low taxation, and all of that's changing and catching up to the West, and profit margins are being squeezed. So we're going to see Chinese economic growth stabilize at much lower levels. And I said in a written piece last month, it's going to be a permanent shift lower for economic activity. And the reason we're seeing problems in places like Evergrande, etc., is they're the canary in the minefield. But I said that last week. So other economic data out in Asia today included Japan, where third quarter GDP was a contraction of 0.8%. And their industrial production collapsed by 5.4%. So you take China and Japan together there, they've got a lot of intra-trade activity, they're going to weigh on each other at this point. So the Asian economic region is still stuttering along, but at a slower pace. We know the United States is slowing. I was a little bit aggressive in my comment this morning. I said anyone who thinks the US economy is strong has rocks in their heads, but is otherwise probably a very fine person. But I was trying to make the point that that US consumer confidence has collapsed to a new 10-year low. It's way worse than it was in the worst part of the pandemic and the lockdowns. And if that doesn't worry any economic forecaster, I don't know what will. And we're seeing US dollar strength as a safe haven, of course. That's going to put downward pressure on the Australian dollar. Normally we would see that put downward pressure on gold, but gold has been very firm and is in an exciting consolidation pattern potentially here to again run higher. If gold should have some sort of correction here, but if it continues to run higher, it will just go to show that the whole world has woken up and is now excited again about buying gold. Clifford Bennett, Chief Economist, ACY Securities. Thank you very much.